Welcome to TradeTheNBI.com. This is John. This report is for Cinco de Mayo, the 5th of May. Well, what perfect timing for the Fed to make their announcement, and market responded beautifully to it. Our expectation is that we would see some sideways trading before the FOMC, and when the Fed announced their interest rate increase, you had a perfect storm of the fact that new fund money was coming in, that corporations for their buybacks were left open, and a huge chunk of the market biased negatively. And that's all it takes to create a giant short cover rally, which is exactly what we saw, plus just a lot of money flowing in. The Fed went out of its way to point out that they weren't going to do anything aggressive, and so 3/4 point moves are off the table, and the maximum will be 50 basis point moves. So from that standpoint, they got everything they were looking for to rally things, and we had talked about being above that 41.91, purely a long setup from there. We went above the 38%. Back and forth on it here. Move like this, you can get as much as a third to half pull back into it, would be not out of the question. Some key factors, you got magenta obviously rising above white on the MBI, so that's positive. This early pivot right there, it's too early in the day to say whether that's going to be sustained, but positive sign here with DOC green over cyan, and cyan at the negative 7.5. So again, those are very positives. Shakeout improving. Key for that will be to get into the positive territory before any decline, so that becomes critical. And that we were not even red positive extreme, but yellow warning sign that we could fill back in most of those. Nothing from a macro standpoint has changed. Inflation is still out of control, and oil and everything are still elevated, but that doesn't change the dynamic of when you have too many people positioned one direction. It makes for an easy opportunity to move them to the other side and take advantage of that. And hopefully what their attempt is to build momentum off of it. From an NQ standpoint, same thing. We had the 23% was the marker that didn't quite get to the 38 like the S&P did, but again, it's got to stay above the 23, which is 13,313. And the euro took a strong bounce off that. Again, they're defending everything they can. Every time we get to that just below 105, they're stepping in as hard as possible to keep it above that level, because we all know that that's problematic if it dips below it. The reading for this from a gold standpoint is going to be pretty hard to keep gold depressed under these conditions, because there's nothing but continued inflation on the board for what we're seeing. Now, of course, I've always argued to you that the Fed's concept on this is, well, with higher energy prices and volatility in the market, you're going to reduce liquidity and dry up some of that excess money that's out there, because it's going to have to be spent for energy, and the other portion of it being somewhat frightened is going to need to move into treasuries. Now, oil, you can see all the way up to 107. That's again problematic as it maintains these relative highs, but the idea being, if it can stabilize in those areas, the Fed believes people will just become adjusted to that, and while it just continues to suck resources out of the economy, that's actually a good thing for reducing the liquidity. And the Fed's not going to do anything about their balance sheet until June now. A lot of people thought it would start in May, but it's not going to. And even when it does, it's going to be minor. It just means they're not going to be buying as much, so they still think there's plenty of excess to soak up that difference. TLT, our projection was always that we were going to be heading towards the 115s from these peak levels way back over here in the 140, 150 range, and we're at 118. Still potential for that to drop lower, but the demand, again, moving into the treasuries on the wild moves, there's going to be competition for those resources, and that it will continue to put some pressure on the market. But you got a lot of liquidity that wants to buy stocks. Bitcoin took advantage of that one. Beautiful little run up there, right back in the same range of the 39, between the 40. Everything pretty much consistent with where we thought we would be moving along. ETH, again, very nice trades going through there, and same with the FOMC. Everything was a buy at that particular point for a 50K standpoint. Likewise, pop-up magenta was just about right before here. It started right there, and you had green DOC leading, pretty extreme levels in that, and all positive extremes, going all the way back down to 4163. So it's a 100-point fill. Now, whether that will happen all at once, probably not. More likely, we're 61% rate. 76% is where it's currently at, 61 down to 42, and most likely a return to 50% would generate new buying from funds coming through there. From a 5K standpoint, it was pretty interesting because a lot of times on FOMC you just go straight across, but we ended up with some pretty decent selling, a little bit of pops, then we got more selling, brought us all the way down to the 40 some level here. What was the actual low right there? 41.42, and then started to catch some buys just before the prelude to the excitement, and then that chopped back and forth, taking us all the way back, so effectively creating what you would look at as a giant double bottom effect, where they absorbed a lot of it in between all of this, and that's when it hit. Started with white leading, but MBI magenta well above yellow and well above the 33. That's still always bullish, so anywhere along this track above that 38 was clean, and then once it popped above the white MBI at this particular stage, then it was just off to the races, and that was an impressive move there from that previous algo 41.94 all the way up to the 43, and that's what it looked like. Now we're filling in a few of these positive extremes. There's a whole lot more of them to go, but it just takes us back to previous algo levels, and certainly you can mark any of these multiples of the red DOC, red extremes that need to be filled. So all of those filled back. We came back to the 42.65. But then there were a lot of little singles and doubles. Those have a little bit less, and they were already filled earlier. So then that takes you back towards here, the 42.16 range, and that's just a matter of waiting for signals that give you the indication that that's going to get filled. We're still in a little bit of weakness, but you can see that building right now with the magenta just about to move over white MBI at this particular stage, and complete collapse in shorts at this particular stage right here at this algo level. All in all, just like I described on our Skype chat, what my expectation was for FOMC, did exactly that. An interesting side note, though, there's a high percentage likelihood that you get the exact opposite reaction after FOMC day move, which at minus 30 right now, that's pretty reasonable that we would have some consolidation back in there. All good stuff. As always, though, I will keep updating you on the Skype chat. Keep trading that pink color. Trade well.